All right. Hello, ladies and gentlemen, boys and girls. Welcome in. It is Sweet Bobby, and I am yawning already. Unbelievable. I do this every day. It's like I don't get enough sleep every night because my wife snores all night. Don't you, Beth? Beth? She's not in here. She snores sometimes. Let's see. Real traders never trade alone. They trade with their fellow nerds. And we've got a boat full today. We got 12547. We got Ben. We got CE. We got DB. We got DMT. We got Drew. We got Edwin. We got Eli. We got Hal and Jim and John and Ken and Matt Jolly Wally. Roll Tide, Matt Jolly Wally. We got Mikey in here. We got Mo. We got Schwaz. Roll Tide Schwaz. We got Sean and Stacy and Steven and Stuff and Tyler and Vicky with an I. Howdy do. So the market's having a little bit of a down day today, but it was a little bit worse, wasn't it? It was over 1% at one point because I got an email from the CME group saying, hey, we're down over 1%. And I thought, wow, yeah, okay. So we've got VIX at 18. I think VIX was over 20 this morning. So that's gone down a little bit. And anyway, it looks really good. Let's see what our big green monster is. And today is the first. So we need to redo the big green muster, don't we? So let's go see if we can do that. I can remember how. Go to the clean chart. And let's take this off. So let's do away with that, remove that drawing, and see if we can figure this out. I'm always bad at this, but we will try. All right, so we'll edit this. I said we'll edit it, by gosh. Here we go. Pull this down. So the low is 54.70.25. 54.70.25. And the high is 58.27.25. 58.27.25. 58.27.25. So that looks good there. Now if I can remember what to do. So now we draw from the 50 to the 0. To the 100, right? To the 0. We draw from the 50 to the 0 to the 0. That's it. So let's go get our right tool now. It'll be this. So we draw from the 50. We draw to the middle of that. And we draw up to the 0. Right there. Then we take the 0. And we take him to the 200. I take him to the 200. Right there. And then we take this little booger. We put him at the beginning of this little red line right there. Yep. And then we escape and we delete this. Remove drawing. So now we've got it. So now we're going to edit properties. And we're going to call this SEP for October. And we're going to make them all green, baby. Now let's go back to our volume profile and see what we got. Looky, looky, looky. Here comes Cookie Cook's Pest Control, baby. All right. So we are fairly priced. We bounced off the 80% line and we bounced up to it. And so now we're going back to the point of control. So nothing really to see here. We're just at the point of control, headed back to the point of control. So pretty cool that this is a little bit of support here at the 80% line. It will be an inflection point. So we shall see, but everything is fairly priced. If we continue to go up, we're going to hit that 58.67 point at some point. So that's kind of the next support and resistance line there, which will be kind of cool. All right, so that's good. Let's look at linear regression, see if linear regression has made any mind up at all. Uh-huh. Oh, that's QQQ. Let's go ES. ES is, I said ES is. Come on, ES. Come on, pull it up. What's wrong with this thing? Anyway, ES should be showing that it's out of that little. Why is that doing that? It's taking forever. They're probably like, you buy the program dude. We give you the details a little bit, but it probably looks similar to this. We had consolidation, so it may be headed outside of consolidation. That's kind of cool. All right. So today, ladies and gentlemen, we're going to do something different. And I'm going to start being an asset accumulator. So let's just show you what now I've done this. I've tried to optimize between two different programs. I've tried to optimize between Claude. Why can I not go to Claude now? And ChatGPT. So Claude and ChatGPT. What's wrong with my thing, y'all? Everything's froze up on me. There we go. Everything's frozen. Let's see if I can go to Claude now. No, this is terrible. What's wrong with this thing? Everything's frozen. But anyway, I've gone between Claude and ChatGPT trying to refine the strategy. And y'all, I'm telling you, I threw the kitchen sink at it. I was looking at RSIs and stochastics and all kind of stuff. But what you're doing is you're backfitting, overfitting for the data that we've had before, right? So, and I figured out that ChatGPT and Claude are not really the best in back testing. I've noticed they've got some errors, and at times, what is wrong with that? Here, let me delete that or get that stopped so we can do it. I've noticed that they sometimes have to have a little help in back testing. You kind of have to tell them a little bit like, yo, man, you don't know what you're doing. So let's close our Google Chrome because it ain't working. Let's end that task. Here we go. And let's open it back up. But they did both agree on one thing, the optimization strategy that we basically came up with. So they both said that that was pretty much the same. So let's see what the strategy kind of looks like and see. And again, let me just tell you this. I don't want any of y'all going into this strategy with me, right? Don't go in with me. Watch me from a distance. Let's go see if we can now look at our ES. There we go. Okay, we have not gone out of the consolidation area. I thought we may have gone out of the consolidation area. So look, we kind of went to the bottom of it and popped back up. So we're still in the consolidation, trying to figure out if we want to go up or down. So that's kind of cool. So let's open Claude a little bit here. Now, remember when I said, hey, y'all, do y'all want a spreadsheet? And everybody's like, yeah, man, that'd be great, a spreadsheet. And I kind of came up with one at some point that come up with this, if we're above this and VIX is this, then it would tell you your allocation percentages and your bill percentages and everything, which was kind of cool. But I've further refined and optimized the strategy. And basically, Hedge Fundy's Excellent Adventure, the TMF, did perform historically better than Bill. So it worked really well in conjunction with a TQQQ or a UPRO portfolio. So let's see if we can go through the strategy a little bit. Now, if anybody wants the strategy, we'll post this in the, hold on, we'll post this. Here's the trading strategy though. Let's just tell you what it does. All right. So here's the enhanced, optimized, volatility adjusted TQQ TMF strategy. Right. So if you wanted to be a little more conservative, you could do UPRO too. I think it would do fine. But it basically allocates between TQQQ and TMF, and it's based on trend following and volatility indicators. And the goal is to capture upside potential while providing downside protection during volatile periods. It also includes a systematic approach for investing new capital or lump sums of money. So the base amount, and this is what you do at the beginning of each month, is you basically say, okay, I'm going to start off putting 60% of my money into TQQQ, and then I'm going to put 40% of my money into this 20-year treasury bond TMF, right? So you do 60-40. That's where you start every month. Now we have a couple of indicators. We have the 10-month simple moving average of QQQ, and we have the 10-week versus the 20-week exponential moving average of QQQ. So it gives us a little bit of trend indicators. And then we also have the volatility indicator of VIX. So here's what your adjustments are. If QQQ is above its 10-month SMA, and the 10-week EMA is above the 20-week EMA, you're going to increase your TQQ by 15% and reduce TMF by 15%. If it's below both of those, you're going to decrease it by 15%. You're going to increase TMF by 15%. And if you get mixed signals, you don't do any trend-based adjustment. So let's look at that. Okay, so let's go and look, and let's go and look at the 10 monthly SMA, and we'll put in QQQ here since we're trading TQQQ. And we do see that on a monthly basis, this is a monthly chart. Get off that. This is a monthly chart that indeed the price of QQQ is above its monthly moving average. Everybody see that? So we are clearly in an uptrend. Now we also want to go into a little smaller time frame. We want to look at the weeklies. And on a weekly basis, we will notice that it'll be the same, but make sure we got our right thing in here. The 10-week exponential moving average is indeed above the 20-week exponential moving average. So what we would do is we basically say, okay, what we're going to do is we're going to start out at a 60-40 allocation. Now, y'all, this is going to be very simple, and I'm going to show you how it's simple because I'm going to give you a prompt that you can use in Claude that will figure this out. Right? So Claude will actually do the figuring for you. And you say, well, I don't want to buy Claude. We'll just use the free version of Claude. That's all you got to do. So as we can see now that we have 60% TQQQ and 40% TMF. But the EMA and the SMA are above. So what does it tell us? It tells us that we need to add 15% to make this 75%, and we need to take 15% away here to make this 25%. That's our allocation right now. Then you got to go back and you got to do a VIX calculation. Okay, so let's go to a VIX calculation. And the VIX calculation is simply this. If VIX is less than 15, you're going to increase your TQQ by 10%, decrease TMF by 10%. If VIX is between 15 and 20, you're going to increase TQQ by 5%. Oh, wow. And decrease TMF by 5%. How about that? And if it's between 20 and 25, there's no adjustment. And if it's above 25 and below 30, you're going to decrease your TQQ. So we're in this area right here. VIX is 18. So we're going to increase TQQ by 5% and decrease TMF by 5%. So let's go back to that. So VIX is 18. So we're going to go plus 5 and minus 5. Oh, sorry, it's percent. Okay. So that's the percentage that we would do now. So I actually have a prompt that you should be able to use in Claude, and I'll give you this inside of our little Discord room, which is kind of cool. So we've got this prompt. Here's the TA monthly prompt. And so what we do is we basically copy this. And let's see if we can just put it into Claude and see what Claude says. So go to Claude, and Claude says, good afternoon, Bobby. How can we help you? And I'll say, bingo. All right. And let's just enter that, then I'll give you my data. Here's what I need from you. Okay, so we need to get current TQQ price. So let's get that. TQQQ is at 69.14. Right? So I go TQQQ is 69.14. TMF is, go back there. So this is very easy. So all you got to do is just type this in if anybody is doing this with me. TMF is 59.69. 59.69. Where's my thing? 59.69. VIX is 18. The SMA, sorry, 18. SMA is above. EMA is above. Current portfolio value is where do we see that? 75,926.01, 75,926, 75,922, 75,926, 75,926. New investment amount. Okay, so we will split the portfolio value into 6 parts. And this is the first part that will be invested today. Let's see. And then it says remaining initial TQQ price for any ongoing lump sum investments. Okay. So this should be able to tell us how much we're going to put in. Please detail the amount that we should invest in TQQQ and TMF and provide the percentages of each. And you don't have to really type that because it should know what to do with this, but I thought it'd be neat to see kind of how it does here, right, with the AI or whatever. So let's see if it'll do the little script over here. So TQQ price, it's got all the stuff there. Calculation is 64, 25, 20. Final allocation, it came up with the same thing that you and I did, 80-20. So toward portfolio is that. So we would invest 12, 6, 54, 33. So that times 80 is 10, 123, 46. And TMF is 20% of that, or 25, 30, 87. So you also should provide the shares. So please tell me the amount of shares to buy of TQQQ and TMF. How about that? Isn't that cool? So it says basically you should buy 146 shares of TQQQ, right? That's the actual investment of 10,094. So without going over, and then you buy TMF for 42. So we got our bill, didn't we? We got our bill. Let's trade our bill here. Where's my bill? We need to get rid of our bill. So we've got positions, bill. We got 750 shares. So we got our money out of that. We should get our dividend. So let's close this. So close position, 750 at 91.45. We are out of bill. Remember, because we didn't want to use bill anymore. So we go to TQQQ. And our little thing said we needed to buy, what was it, 146? 146 shares. Yep. Let's go do that. TQQQ is 146, so buy 146 shares. Now I know what you're saying, Bobby. You could 146 shares, you could sell a put on that, couldn't you? I mean, absolutely we could. And we could say, what if you did a 30-day put and did two of them for 146, and you did about a 30 delta, probability of being in the money is about 30. You could get $426 or so. Right? So if we did two of those, we get $428. Absolutely could do that. Absolutely could do that. But I don't think I'll do that today. I'm excited about my new little program here and just buying shares. So I think it'd be kind of be neat to buy. Let's see, edit order. So let's go clear order. Oh, y'all are talking things. Right where we wanted them the entire time. That's right, Matt Jolly Wally. Sell at the money. Yeah, you could certainly go. Phone cut out. Why are you closing Bill? Because we don't want to hold Bill. I'm going to now allocate my entire portfolio to TMF, which is a bond fund, and TQQQ. And in back testing, TMF did better than the bill, even though I didn't take into consideration the dividends that we received and everything. So
You ought to hold Bill for your uninvested cash until you're fully vested.
but I won't have. I will be fully invested today, though, right?
No, you're only using 1/6 of your money, so you still should have 5/5 left in
Oh
cash.
God, you're right. See, you're right. See, y'all are smart on this stuff. You're exactly right. That's exactly right. I should leave some of it in, Bill, because I'm only using 1/6 of my cash. Hal, what would I do without you, Hal? I have no idea. I'd be lost. I'd be a duck without a bill. So you're right. I should have left some bill in there. So no big deal. We can add that back. No, hardly any transaction costs on that. So let's buy 146 here, and then we'll kind of figure it out. So we'll buy 146 of these. Review and send. And I hadn't bought stock in a long time, so it's like, here we go. You got 146 of that. So let's go back and let's go to our little thingamajiggy here. And our thing says we should buy 42 shares of TMF. 42 of TMF. So let's do that. TMF. So we're basically dollar cost averaging into this. So we're going to buy 42 shares. And that looks good. And we're in that. So that was a total of 12,000 some odd dollars. Y'all are exactly right. I should leave some bill in there. So that is a total of, where's my total now? 12,654.33, for example. 12,654.33. And let's see how much my option trades are taking up. So let's go to the positions and the count requirement again and pull that up. Let's look at everything. So let's now do upload the report. So now we're using 335625. And this is, that's not quite the 12, is it? But I guess we can, the entire thing is 12,805.31. Let's just take that out of it. 12,805.31. So if we've got an account that's worth, what do we say that our thing was worth? Hold on a second. We said 75,926. 75,926 minus our capital requirements was 12,805. We'll just do 12,806. So we can do $63,000 worth of bill. And let's see what bill's going for. 91.46 divided by 91.46 equals 690 shares. Let's buy 690 shares. See how we're doing there. Ta-da! Now let's go see what our cap requirement looks like. Let's go over here. There we go. Boy, that doesn't take much at all though with the bill, does it? 15,766. That only took 12, so we're only using. Is that right? That's incredible. We're only using $28,000 worth of capital. Beautiful, 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 beautiful. Actually, the way they do that bill, you could even buy more, I guess. Let's go over here and make sure we're not paying any mortgage or any mortgage interest, any interest at all. Let's go to let's see, where's our balances at? Let's go to our balance here. Make sure everything's fine. Cash, 439.89. So that's positive. Settle cash, 65.25. Everything looks good there. So I think we're good.
Have you considered selling a call against the 100 shares of the TQQQ you bought?
I would consider that. Absolutely. Let's look at it. And how I'm not exactly sure that I wouldn't sell puts to get into it. I mean, really, as a way to get into it as well and buy those at a more attractive price. But let's see, we've got TQQQ. Let's look at the chart on TQQQ. Here we go. So great day to buy, right? On a nice, good down day. So we got a great down day on TQQQ. Let's look at, where would you do about a 30 delta and maybe 30 days away, since we got to make our next adjustment in about 30 days, 31 days. And we got 146 shares here. We could sell a 30% probability of being in the money and get $255, y'all. That's just $255 just coming right on in. What do you think about that, Hal?
I don't know. I mean, you could go more to like a 20 delta, something like that. You just consider it like added interest on your money, instead of being so close to the current strike price.
Schwaz does make a good point, though. He said, Bobby, do it the way you back tested, or all your work of back tested is voided. You're right there. Because if TQQQ has an ability, y'all, we know because it's a 3x levered thing, it has an ability to go way, way up. What you could do, though, Schwaz, if you wanted to, we could actually start drawing the big green monster on QQQ, or you could draw it on TQQ, I guess. You draw the big green monster on those things, probably draw it on QQQ. Draw that because that's where the real volume is, right? That's what we're dealing with volume and all of that. Probably draw it on QQQ and use it. And you could start making these decisions here. For example, if we determine that QQQ was overbought, for example, and that there was a good chance that it was going to fall, you absolutely could go out here and sell your put. You could do it. Let's see, if we went to 20 delta, I mean, that's still bringing in $141, just a pure income on the thing. So does anybody want this? Y'all want the prompts and everything? Let's see. We've got the indicate. Here's the strategy, which is very, very simple. And I don't even think we need a spreadsheet anymore, because all you got to do is just tell Claude every month, hey, do this for me. And here's the prompt, and then the prompt should be adjusted to say, give me the specific number of shares. We told it to, but it didn't do this. Provide the total number of shares to buy for each ETF. So it didn't behave. It didn't look at all of my Schwaz. The decisions are based on it's based on this prompt right here. Here it is right here. You start off with 60-40, right? You start off with 60-40, and then you make your adjustments. So both EMA and SMA were above. So the rule says increase that and decrease that by 15%. So we went to 75-25. Then the VIX is at 18. And because of that low VIX, it optimized it and said, well, in these areas when VIX is under 20, you actually are optimized by going a little bit more into TQQQ and a little bit less here. So that's all we did. Now, look, here's the great, yeah, the big green monster is not a factor in the, I didn't include that. I thought about including it. And I also thought about including all kinds of things like RSI, stochastics, MACD. And I thought, let's just do this really, 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 really simple. So this back tested really, 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 really good. This was really, really strong. I think it was like 24% or something a year or something. It was really good. Keep it simple, stupid. Exactly, Schwaz. So don't do RSIs and all this other stuff. And I was doing unemployment rates. If the unemployment rate was this, and yeah, it optimized it a little better and it made it a little safer. But it's just like, you need to just keep this thing. I wanted something that was simple, that I don't have to worry about except for 12 times a year, and then just go with it and do really good. Now the back testing, like let's see the back testing on these things. Chat GPT comes up with one number and this one comes up with another one. Let's see what this one came up with. No, I don't have it yet. Let's see. Let me go to this one here. Claude back testing 60/40. Here it was. So TMF, if you start with, I think this was $100,000 back in 2010, it comes up with that you're going to be at $2.5 million with an annual return of 24.63%. Maximum drawdown was 42%. Now, keep in mind, if there's a crash, and this would have helped us during the 2020 crash, then we've got the Sweet Bobby hedge in place, right? And it had a good Sharpe ratio. So now what we should do is we should go back over here, right? And we should say, let's look at everything. And let's look at that updated risk analysis. Points 40. Let's see what else over here. Bill shouldn't be, let's go back and take Bill off. And I think we need to take TMF off because I don't think TMF is going to, you don't want to, well, let's leave TMF on there and let's see what happens. Let's go over here and let's do this as beta weighted. There we go. That, in other words, if you don't do this, it's basically going to go, hey, how would your portfolio do if TMF was up? If TMF is down 20%, and if TQQQ was down 20%, and all of this, no, stuff, good point. Stuff says if you increase TQQ by 15%, should that be 15% of 60? So it becomes 69%? No, it's actually adding 15% points to the total. Yeah, I asked that question too. I was like, hey, wait a minute. Are you saying increase it by 15% or you're doing the total allocation by 15%? So it's that total allocation going up by a factor of 15. Hedge Fundy has taken some shares off at certain percent up, right? Hedge Fundy does a quarterly rebalancing back to the 55-45 or 60-40, whatever the latest hedge fundy thing is. So here, you want to make sure that it's beta weighted. Let's see what that looks like. So my ES positions would be down 20%. My TMF would be down 20%. No, that doesn't look right. And TQQ down 20%. That should be beta weighted. Let's see. Let's get all this down. Uncorrelated stays the same. beta weighted should take that thing down to 20%. Here, let's go back over here and let's take TMF off. I don't think that really. Let's go back over here and let's readjust beta weighted. Yeah, y'all remember the other day when we did this? This was basically showing us that this thing was down 60%. This should be down much more than the 2002, but I'm not sure why it's not doing it. Okay, there we go. Now it's down 90%, but that's not right. It should be beta weighted. 20%. That's weird. Let's do none. Now it's got it down 90%. It's strange. But it looks like, let's do unweight this and let's see what our, okay. So it looks like we've got, make sure we're in the right account, Crimson Orchard. We got 3 and 3 there, and we've got 5, 25, 5, 5. We took those 3 out. That looks stronger than it should be, I think. I'm not sure. This thing's got a life on. Let's close it and open it back up. Let's close it back up. Let's open this back up. So let's go to positions. We go to cap requirement. Let's go to cap requirement. Let's just do there. Let's update this. That looks a lot stronger than what we had yesterday. What's going on? Make sure we don't have any order legs in there. No, we don't. So that looks good. So let's go back and add add TQQQ. So that's got TQQ added, down 90%. It would be 89.76 loss. Wow. Okay. I can dig it then. If this is, it's just different than what it was yesterday. Kind of strange. All right. What about this one? Do you ever take shares off at profit? Well, it's a good question. So let's think how this thing works. We'll look at it on November, and basically we'll take shares of TQQQ off if what? If we start to go down. So it's a good question. It does take them off at some point, but you got to look at your indicators as what to do it. If volatility starts going up, it's going to go down. Stuff says if you're already at 80% and the EMA remains above next month, you will end up at 100% TQQ, no TMF, and if it remains above again, you won't adjust. No. So every month, stuff, that's a great question. Every month you start with 60/40. So even next month on November the 1st, I go in and I start at, okay, my base allocation is 60/40. Then you do the computations. I had the same question. And I even made the Chat GPT and Claude give me examples so that I could follow along with it. But yeah, you actually go back and you tell it at the beginning of the month, you start 60/40. So it all starts 60/40. And so if y'all want to do this, y'all might want to do this. Y'all might want my data file because I had to pay Yahoo to get the data file. Let's see, I had to, where is it? Open in downloads. Hold on a second. If somebody wants this, that y'all want to back test this stuff, because if you're trying to back test this stuff, you will need to do it in, you'll need to download this data. And so back test extended correctly, bill, downloads. Not last week. Hold on. Let's go down here. Let's go downloads. Here we go. Historical price data from Yahoo Finance. So what I did, yeah, here it is. Here's the information that I gave it. So we've got data, and if y'all want this data, just let me know, and I'll get you the data. Here's the data all the way from 2010 to present. and it's got the TQQ price on all those dates, got TMF price, we got the bill price. I also did UPRO if you wanted to test UPRO, and I got SPY, and I got VIX, and then I went back and did all of the above, below things. That took me a while. Are we above the 10-month SMA, and is the 10 above the 20? So we went back and did all of that data. So if y'all want this data, you can then upload this data to Claude or ChatGPT and get it to spit out the results for you. How is TQQ affected by volatility? Is the vols 3x higher? Well, what we found in the back test that were conducted is that the higher the volatility is, the lower your allocation needs to be of VIX. So if VIX was really high, then we decreased our TQQ by 10%. If VIX was, moderately high, between 25 and 30, we decreased TQQ by 5%. And no adjustment if it's between 20 and 25. And today, because it was 18, we increased it by 5%. So when VIX is lower, we allocate more to it. And so what I basically did is had the both back testing programs to take VIX into consideration and develop some type of optimization so that we could optimize the Sharpe ratio, which was risk adjusted returns, so that this came out all right. Now, and some of you guys may take this to Portfolio Visualizer and do some stuff with it, and or do something. It creates a Python script for the back testing and all of that, and you may find out something totally different from what I found. But I thought what was cool was that both ChatGPT and Claude both said that the 60-40 base allocation was best. 60-40 base allocation is best. And then we further refined it. If it's above those two moving averages, it's a more bullish environment. You can put a little more into TQQQ. If it's below it, you put a little less in, and it worked out really good. Now you got to keep in mind that this thing had a 42% drawdown. So this is not for the faint of heart. Problem is, and some of you guys will go, Bobby, you don't know about the volatility decay and all that. Yeah, I've read all of that, but I still think this is a pretty neat strategy, worthwhile strategy that will do okay. So we'll see. Let me be the guinea pig. Y'all don't do it without me. Just watch me. Let's just watch how this does. And what I like about it is we'll make these little, and ChatGPT and Claude, they don't even know, hey, we've got a hedge in the background, right? We've got this hedge in the background that makes us be up $36,000 if we're up really, really big. So this is going to be really cool to have crash insurance and the TQQQ. All right, any questions at all? Everybody good? Anything that y'all want, let me know, and it's yours. And I love and appreciate all of you. And, it was sad. I posted something about this in Reddit the other day, and someone said, oh, just something for Bobby to bilk his subscribers with. He's a fraud and all this stuff. And that hurts me a lot because y'all know I'm an open book. I lost money big time on August the 5th. And, it still haunts me to this day. But now I'm an asset accumulator. That's what I'm doing. I'm accumulating assets. Done a little back testing. Yeah, haters gonna hate. And I try to be an open book, and y'all see what I'm doing with my real money. This isn't fake money. So I'm willing to say, hey, let's put $76,000 toward this strategy, see how it does. And with a hedge, keep the hedge going, and hopefully this will be a nice little income trade for us. Yeah, us Bama fans are used to it. We get a lot of hate, that's for sure. All right, I love you all to pieces. Thank you for joining us today, and I will see y'all tomorrow. Bye, y'all.